NCBA Group has revealed that it opted for South Africa's Nedbank Group as a strategic investor after snubbing several acquisition bids, citing minimal disruption to its business, staff and brand as a key deciding factors. The lender disclosed on Thursday that it had over time attracted interest from multiple suitors, but ultimately settled on Nedbank, ending months of market speculation that it would be acquired by Standard Bank Group through its Kenyan subsidiary Stanbic Holdings. Here's NTV's Brian George Otieno with more.
In October last year, Bloomberg News had reported that Standard Bank had authorized Stanbic Holdings to engage NCBA with a goal of concluding an acquisition deal. NCBA Chief Executive John Gashora says the board prioritized a transaction that would preserve the bank's identity and avoid what he calls a painful integration process that have characterized past mergers in the region. Nedbank has tabled an offer to acquire a controlling 66% stake in NCBA in a transaction valued at 109.9 billion shillings to be settled through a mix of cash and Nedbank's shares. Top NCBA shareholders with a stake of 71.2% are backing the deal.
80% of the consideration would be paid in shares of Nedbank trading at the JSC, and 20% would be paid in cash. Obviously, as we will see, there's a caveat that there are shareholders who own shares which, when converted, would be less than 200 shares of Nedbank. Then those would be paid in cash. And any shareholders who, for regulatory reasons, cannot invest offshore, and there are funds and insurance companies that may have some restrictions as to where they can invest their funds, those would be paid in cash.
Several mergers and acquisitions in the market, including the merger between Commercial Bank of Africa CBA and NIC Group that resulted in the formation of NCBA, were accompanied by name changes, both branch closures or relocations, job losses, and major system integrations, often causing disruptions for employees and customers. Under the proposed transaction, NCBA will retain its existing board structure, with Nedbank nominating at least 2 directors to the NCBA board, while current NCBA shareholders will appoint 1 representative to sit on Nedbank's board.
We expect a rally. Since the markets opened, we've seen an 8% improvement in our stock price, and we expect that will continue throughout the day as investors take into account the news and really see the opportunity that this unlocks for NCBA.
NCBA closed Thursday's trading session at the Nairobi Securities Exchange at 98 shillings and 25 cents a share, having opened the day at 89 shillings and 75 cents. This seemingly the year of mergers, acquisitions, divestitures, listings and IPOs. Unlike the norm, NCBA reiterates that its buyout by Nedbank will be painless. The process, it hopes, will end by end of Q3 2026. Brian George Otieno, NTV, Nairobi.